Okay, so again, good morning to everybody. Let's get started here with a little bit of what we want to do and what we want to trade this weekend, or this week, excuse me, after a nice weekend. And I hope everybody did have a good weekend. I sure the heck did. We spent a little bit of time out of town, out in nature, which is always good. I've been doing a lot of naturing the last couple of months, and it's severely underrated. It's great to get out there and get away from cell phones and computers and internet and everything, and just have a couple of days to unwind and take it all in. So very good stuff. But I am always happy to be back to the charts. And I'm happy to be back with you guys. We have some good stuff to discuss this week. So let's get right down to it and just kind of see how everything's playing out. As always, guys, any questions you have, any comments you have, anything you want to discuss, don't hesitate. I'm happy to hear your guys' thoughts, your questions, your comments, favorite trades that you are looking at, any of that stuff. So don't be shy. Just type it right into the chat. I'll be happy to discuss any currency pair you guys are looking at. And hopefully we'll cover a bit of it already anyway in the regular morning session. But anything we miss, anything you wanted to know more about, anything like that, just holler. We'll get it done. But very happy to see everybody this morning. Welcome, guys. Hello, Sharon. Good to see you, Sharon. Hopefully all is well. Hey, Rob, Paul, welcome. Glad you made it in. Hi, Patty. Hey, Lars, Kevin. Good to see you guys. John, Jennifer. Hello, Jennifer. Nice to see you. Greg, George, hello guys. Dwayne, nice to see you. Good to see everybody. Okay, happy to have you guys in here. Let's get this chart stuff going here. Okay, so first of all, just kind of the quick look at everything that we're looking at as far as news goes for us. And as far as news goes, we've got a little bit of holiday action going on today, and some of yesterday for Australia and today for Europe. So probably be a little bit of a quiet Monday. We'll see how things play out, but we don't look to do too terribly much on Mondays anyways. That's kind of why we do our webinars on Mondays. We kind of let the markets, work their way through the London Open, the US Open, kind of get the wiggles out a little bit, and we kind of trade the rest of the movement for the week. So it's okay, but we do have some holidays to start the week off. George, I will definitely talk about the Aussie CAD for sure. I'm very interested in the Aussie CAD. I'm interested in a lot of CAD pairs right now, actually, so we'll cover that one, absolutely. So news and so on this week. We've got kind of a hey Mel, good to see you. Kind of a just a relaxed calendar. There's a little bit of something every day, but so far it's just kind of smaller amounts of announcements. So lots of pound stuff today, pound stuff on Tuesday. We're not really watching pound pairs, so we'll just let that kind of play out. Going into Wednesday, we start to see some more interesting stuff. Draghi's going to speak out of the European Central Bank. We're getting very interested in the euro dollar and the euro Swiss. So this will be interesting for us to see what Draghi comes up with on a Wednesday. So we'll be looking at that. On Wednesday as well, we have some CPI numbers for the U.S. We're definitely getting very interested in U.S. pairs, like very, very interested in U.S. pairs. And then on Wednesday, again, we have Australian employment numbers, which are sure to always bring some good surprise along with them. Canadian, Australian, New Zealand to some extent, employment numbers can be very, very volatile still. U.S., not as much. We saw U.S. employment numbers on Friday. They were a big change from what we've seen for the last couple of years. Pretty much every employment announcement for the U.S. has been pretty darn close to expectations. Everything's been pretty positive, all that good stuff. And then on Friday we had, you know, pretty decent expectations. The employment numbers came in like 100,000 less, which is pretty uncommon. And the dollar's starting to move. We're going to talk more about that. But we do get quite a bit of volatility out of Canadian and Australian, and like I said, sometimes the New Zealand employment numbers. So that's happening on Wednesday. I will be at the charts. We'll be watching everything on Wednesday. We'll be seeing how, you know, how everything's kind of playing out and coming along and so on. And then, of course, the Swiss National Bank press conference on Thursday. Switzerland doesn't really like to change anything too much, and when they do, it's tragic. But we're going to watch this. We're going to just kind of see how this plays out, see how this goes. But likely there will be no change and no reaction in anything Swiss. So we'll see how that plays out. Okay. And then on Friday, retail sales for the U.S., and that's pretty much it. And let's see, Paul, somebody in the webinar, okay, so when pivot points are hit, not hit on chart. Okay, yeah, we'll talk about pivots for a couple of moments here. I think that's a good question that a lot of people, you know, probably are still having a little bit of. So yeah, we'll spend a couple of minutes talking about pivot points. So that's the calendar for this week, guys. We've got some things coming up. Let's use this opportunity, as Paul's asking here about pivot points, to look at the dollar index and some pivot points and some details we have here. Okay, so Paul, real quick, and everybody, a little recap on pivot points is always good. A hit pivot point is something like this, right? You know, clearly some candlesticks are hitting that pivot point. I hope this is a question you're asking, and I'm not answering something else here. Okay, I'm pretty sure that's it, right? They're just asking basically when pivot points get hit. So hit pivot point right here, hit right there. You know, we can see those pivot points clearly getting hit, right? That's a hit pivot point right there. So anytime the candlesticks, you know, touch the pivot points, that counts as hit, right? Now, this, let's go over here for a second. I'm going to delete that guy. This is a missed pivot point, right? That pivot point, that's the daily pivot point. The same thing applies with weeklies and monthlies. That's a missed pivot point, but it's only missed as far as, any wick, any part of the candle, anything that touches a pivot point counts as hit. Now, when a pivot point is missed like this, this could be a hit pivot point. We'd have to go and look, and I'll just extend this line out there and just say, okay, I would consider that a hit pivot point now. And it's barely, but you know, we'll consider that hit because now that level has been hit, right? And I'm glad you brought that up, Paul. This is definitely something I get asked, you know, on a semi-regular basis, which is, you know, identifying those pivot points. So remember, when a pivot point is missed like this, it's only, you know, it becomes a level basically. Right now, it's a clear blue line that we're trying to see if the candlesticks are going to hit. And again, any wick, any part of the candle touching that, and it's hit and it's done, and we don't really care about it anymore, right? So as soon as a pivot point's hit, it's kind of off our radar. But if it gets missed and it's not hit during the day, and another pivot point comes out, another one, then we just extend that line out. And that's how we will judge whether a pivot point gets hit. So, you know, an example would be, you know, like this one right here as well. That was clearly a missed pivot point until over here when we crossed through that level. Same, let's see, is that, you know, same thing with a couple of these, right? Missed pivot point, and it was missed for a couple of days. Each one of these represents a day. And then it gets hit right over here. So pivot points are missed until the level is hit. Missed pivot point gets hit over here, right? Does that make sense? So again, any part of the candle hitting that means it gets hit, and then likewise, whenever the level of the pivot point gets reached by the market, whether that pivot point was 2 days ago or 2 months ago or 2 years ago, whatever, that now counts as a hit pivot point. So good question to start the webinar off with. That's a good one for sure, because pivot points are so darn important. They really give us such a good idea of of how balanced the market is and how well the market is trending and moving. And excuse me, we are going to talk about that in relation to this dollar index and the euro dollar, because we have a bit of a pivot situation that I'm watching, I'm wondering about. I want to kind of see how it goes and how it plays out. Mohammed, yes, pivot points can be support and resistance. I don't ever use them for that. I very, very rarely use pivot points for support and resistance. I just use them for, like the things I've talked about, like the balanced trend. But yeah, I don't ever use a pivot point for support and resistance. Sometimes they work great. I mean, this was a nice little opportunity, right? We saw the dollar index run up and just miss that weekly pivot and come back down. So you could say, yeah, that acted as pretty good support, or excuse me, it's good resistance. But Yep. We do want to draw our support and resistance levels. Exactly. Absolutely. So yeah, good questions, guys. Good questions. Okay, so since we're on the topic of the dollar index and kind of where this guy's headed, we have been talking, and I deleted my trend line because I wanted to get the clutter out of the way here, but we've been talking about this dollar index for some time now. We had bad employment numbers out of the US on Friday. And so those bad numbers, kind of got the dollar moving a little bit. The dollar's been very, very stuck. And I think the dollar probably is still a little bit stuck, right? We've got some trade stuff going on with China, and that's going to affect the dollar a massive amount. And so it's kind of got a tight leash on it. It can only move so much until we get some clarity there. Markets don't like uncertainty. Elections, trade wars, anything else can really kind of make a currency just go sideways until there's some sort of clarity. And then traders start pushing one direction or another. So that's something we're going to look for. And Mohammed, targets, pivot points are our targets typically. Yep, we use pivot points for our targets in a big way. Absolutely. So this dollar index right here is starting to break. Remember, we talked about, and we have talked about in past webinars, 9,700 kind of being 9,700 kind of being an important level. We're just below 9,700, not by much, but just by a little bit. And we're seeing what's going to happen here. This is our 200 moving average, and what has been going on for an entire year on the dollar index. It got above the 200 moving average, and it's been testing it and testing it and testing it and testing it, and here we are testing it one more time. So 9,700 was a pretty important support level to break, and that was kind of step one to getting this dollar starting to move a little bit. But I think that the 200 EMA is going to be kind of step two. Let's get below this thing, because this takes us, once again, this takes us all the way back to April. So more than a year. April 2018 here was the last time this was below the 200 moving average. And otherwise, it's only, it's peaked below by a couple of pips for a couple of minutes, but we haven't had any real kind of significant closes below the 200 moving average or anything like that. So we're looking for this thing to really kind of change momentum and slowly get us below there. We had a very, very nice double top up here that was, pretty obvious for an early signal, an early sign of something is possibly happening here. But that 200 moving average, I think, will be the final nail in the coffin. Because so far, for a whole year, it's tested that 200 moving average very regularly and has been very much unable to get below it. And so now we want to make sure that that we don't discount, the strength of that moving average. We've got quite a little trend in the works here, and so we're just in the early stages of getting some breaks and getting some movement there. Now, why does that matter so much? Why do we care? Because we are definitely looking at some dollar dollar movements and dollar pairs, and we've got a whole bunch. You know, I would say the 200 moving average is sitting just below 96.50 right now. I'd say this kind of 9,700 to down to 96.50 is pretty significant. That's a strong little area. We start getting below that, and it's time to trade the dollar down, like I've been talking about, right? There was a chart here. Let's see, where did I put that on that chart? Maybe on New Zealand. I don't know. Oh yeah, there it is. On the Friday webinar, I said this is what I want to do, and this is pretty much against what most people are saying to do. I want to buy the Aussie dollar. I want to buy the New Zealand dollar, and I want to sell yen. I want to sell US dollar. I want to sell Swiss franc. And those are probably ridiculous ideas right now because we have a lot of risk going on in the market. But I think that risk might be a little bit short-lived. That super risk-off kind of move that we've got going on might be shorter-lived than not. You know, we're going to get to a point where there either has to be a major recession or not. And if there's not, then this selling of these guys is going to be the trade. If we do get a recession, then we'll kind of change our point of view. We're not up to our eyeballs in sell trades on these yet, but these are kind of things that I'm looking at here. Everyone good with that so far? Is that sounding good? Making sense? You guys okay there? Any thoughts? So going a little bit back to this dollar index here, what we want to look at on the 1 hour chart is we want to look at, yes, Mohammed, I'll look at the Aussie New Zealand. We want to look at the 1 hour chart and say, all right, how is this thing looking as far as kind of the immediate movement? Is this getting overextended? Have we left a lot of missed levels? So far, we don't really have any missed pivots. We've got this weekly up here that, we can say, yes, that was a missed pivot by a couple of pips, and it's only a few pips away from that anyway, so I'm not too terribly, I guess, worried about that. What we're really kind of looking for here is, do we have some market imbalances? Do we have some levels that, might need to be checked out before a real move starts? And, we do have some market imbalances, right? 97.50, we've got some stuff lurking up there. This guy was pretty darn close to getting hit. That was a pretty good retracement, so that may or may not have a lot of weight on it. I would say this is definitely a good little, market imbalance up here, about 9,700. So there is a weekly pivot up here, and that, that may be something as well. I'm not too worried about that daily. Dailies on their own are not too terribly much unless we have a whole bunch of dailies. So what I'm kind of looking at here is if this movement starts, and we really get that dollar push starting, I'm going to be careful and I'm going to be skeptical because we do have some stuff up here, weekly pivot, pretty big market imbalance, a medium market imbalance right there, and a pretty good market imbalance right there, and a weekly pivot right there. So what that tells us is we want to be very, very cautious for the short term, trying to get bearish dollar index, right? We're saying, hey, hold on, this might not have, a really strong, really aggressive move yet. It might need to come back and get up into this 97.50 area before finally making that big sell-off. I think the employment numbers were a big kind of signal, but I'm just very, very skeptical, and that's why I said I'm watching that 200 moving average as well on the dollar index to see if we can really clear that level, because we haven't been able to clear it for a year, and now we have some short-term things above that are telling us be a little cautious, be a little careful. If this doesn't rally a good bit, if it doesn't run up a bit before selling off, then we need to be really, really careful about how we trade this. This would be something we would scale into, dollar trades, looking at other pairs. We'd scale into very carefully and or protect profit very aggressively because, of this. So dollar index is very much on our minds. Obviously, we don't trade the dollar index directly, but we are using it for a major gauge here. What we will trade directly is the euro dollar, which is basically the dollar index, it looks very much the same here. So euro dollar has got, you know, kind of all of this same stuff here, right? Big market imbalance right here at about 112.70. Here's the euro dollar at 113.17. So big market imbalance, weekly pivot, market imbalance. It was almost hit, but I really, you know, unless the market imbalance is hit, it's very valid for me. So we've got that at about 112.40 and 112.70. We probably could say that we have something kind of lurking through here, but oh, never mind. That's been hit. There's a little bit of consolidation for a breakout, but that has been hit over here, so we're good on that. So euro dollar has at least a couple of lower levels, and what I like about the euro dollar is these lower levels. Do you see this trend line kind of coming through here? That's a big long-term rising or falling wedge. We broke out of it. You can see we've tested it. It's holding like crazy, and it's slowly making higher highs and higher lows. I would feel pretty darn interested in the euro dollar, as you know, if this can get back down into kind of this 112, 40, 50 area, which would put the dollar index back up towards some of those targets that we talked about. So the big picture on euro dollar is this, right? So we've got this, but we have a very similar situation on the dollar index as euro dollar. This takes us back to you know, May 2018. Test. You know, it's been below the 200 moving average for quite a while. So we got to get clearance of that 200 moving average. But I would say, you know, same thing, nice double bottom here. I would say that we're kind of in that same area of you know, double bottoms, trying to clear some areas. We need to get a little bit of pullback, but it might be time to start trading this euro dollar up. We've been waiting and watching. We talked about 110. We talked about 108. We have a big gap down there. It could happen sooner than that, and that 111 could be our you know, could be the area that we want to kind of just use to invalidate this trade. That's a pretty good little area. You know, we've got some stuff right back in here in May of 2017. That's pretty. Hold on here. Let me get that out there. So, you know, there's definitely a level happening right there at about that 111. If we break down below, we could be headed, you know, to fill that gap, and we could also be headed into this 104, 105 kind of a situation. But so far it looks like, you know, that's a pretty bullish weekly candle right there. We've got a pretty bullish daily candle, a couple of daily candles as well. And so I don't know. I think this euro dollar might be ready to start looking for some movement here. One thing to remember about the euro dollar is it probably will be kind of slow, but that's all right. We'll be watching, ready, waiting for it. 112, you know, 112.40 should be a good little spot to look for. It's not super far away. We're looking for a pullback of less than 100 pips. And I think that could be good. Okay, any questions about euro dollar? Everyone good about euro dollar and kind of that dollar index and what we're looking for there? Is that clear for everybody? So euro dollar index, that's kind of where we are on those guys. So that should be a nice little trade. I'm looking forward to that. Should be a good little one to get into. While we're on the topic of dollar anything, let's look at a couple other dollar pairs. I've talked about the Aussie dollar and how I like this whole area here. Curious to see if we can get Aussie dollar down a little bit below, you know, some of these spots, some of these areas here, and we're seeing a pretty nice little reversal set of candles here. So we're just going to watch this. Aussie dollar or New Zealand dollar had a excuse me, a pretty good breakout, but it's starting to kind of pull back a little bit. We'll see how far it pulls back. I like these big support levels, but maybe this is kind of the random turning point, and maybe that's as far as it's headed down. So we'll see how that goes. We don't have any real significant market imbalances through here. This has been a very steady movement, right? We get, some little runs, little pullbacks, little runs, little pullbacks, no real strong, that was our strong movement right there, but it's already kind of retraced and taken that out. That was our market imbalance right there at about 66.25. So now there's a couple of pivots. There's a daily pivot. There's not even really a couple of pivots. There's like a pivot, that daily pivot right there. So that looks like we might be ready for some more dollar movement. So we'll keep our eye on that. But let's get this down here just a little bit more. There's other New Zealand pairs I'd rather trade than New Zealand dollar right now, so I'm going to be careful on this one, but I'm kind of using this for reference on just dollar movement. You can see that there's definitely, right about that 66.15 area, resistance, support. So we start getting kind of below that, and we should take out some of those lower levels, and we'll start, seeing if there's some buying opportunities. Might be some little scalps against this 6600, 66.15 area, worth keeping an eye on. But so yeah, New Zealand dollar, we're looking at that, and so on. Let's talk for just a second about dollar. Well, not really dollar Swiss. I'm not doing too much on dollar Swiss yet, but dollar CAD is kind of a lot more interesting, right? So we looked at this dollar CAD. As the news was hitting on Friday, and the dollar CAD has kind of had this big rundown. I talked about wanting to, we have a big market imbalance up here big market imbalance up here at about 136. I talked about shorting up here around 136 and even 136.50. Market imbalance, double top kind of a thing. Didn't make it up there. It made it up to about 136 or 135.60 area, and then started kind of coming down pretty hot. There's some important targets down here. We've got a big market imbalance around 131.50, and we've got some big pivots back here. But we also have that big market imbalance up here at 136. So we're seeing a lot of Canadian dollar strength today. That could be that could be here to stay, or it could be a little bit shorter lived. I'm kind of looking for a little more on the shorter lived side of that. Big market imbalance and weekly pivot right there. So that's up there at 133.45, 55 area. And that's a good little chunk of pips away from current price. And then we also have, this sell-off's gotten a little bit aggressive. We also have a daily pivot here, and we have a daily pivot here, and a daily pivot here. So dollar CAD's getting a little extended, and this kind of goes back to the theme of euro dollar made an aggressive run, left some pivots. Dollar index made a bit of an aggressive run, left some pivots and some market imbalances, and this has made a pretty aggressive run and left, both levels. So I just want to make sure that we're not trying to jump into something that's not ready for us to jump into it. And if we do get into a little bit of this here, we're going to make sure that that we're aware of these kinds of levels and so on. And this could end up producing some sort of buy signal for us at some point even. One thing that I will look for is if the dollar CAD pops down a little bit more, we'll probably at least look for a short-term, kind of almost a scalpy kind of a trade if we get 3 consecutive daily pivots with, a weekly and a market imbalance up above as well. So right now we've got 2 consecutive dailies. We'll see how that, if the third one pops up. But dollar CAD's looking interesting. We'll see how that plays out. It's kind of got a nice little, nice little channel here that we can also watch. And so, there's some stuff kind of lurking in that area. So we'll see how that continues to play out. But so that's dollar CAD, that's euro dollar, New Zealand dollar, and those are the those are the dollar pairs that I probably want to trade. I don't want to trade dollar Swiss too much because it's just so slow. Our last dollar Swiss trade made us some good profits, but holy smokes, we had to stay in it for too long. And so dollar Swiss pretty much always does that. It gives us these, these long dragged out trades. But other dollar pairs tend to, not be so so much of a pain. Dollar CAD looks interesting. We'll see how this one plays out. Euro dollar looks interesting. New Zealand dollar looks interesting. Those are probably the dollar pairs that I want to trade. Of course, along with the with the Australian dollar, and we'll talk about that, which will segue us a little bit into some Aussie pairs here. So same kind of movement here on this Aussie dollar as New Zealand dollar. Ran up, kind of hopped around, dipped back down. We took I forgot how much we took on this. We didn't take a ton on this Aussie dollar. Yeah, 40 pips. We only took 40 pips on this thing because we wanted to get out before interest rate news or whatever the announcement was. I can't even remember now. I think it was interest rate news. But the Aussie dollar still is very, very interesting. And this is why I'm so interested in these dollar pairs, is that they're, everything's kind of approaching some pretty major areas. Aussie pairs are all collectively approaching major areas. And so I love the fact that, the dollar is hitting some major resistance. The Australian dollar is hitting some major support. That sounds like a match made to heaven, if you ask me. So, that big double bottom is still, well, almost kind of a triple bottom here, is still very much on my mind. So we're just kind of watching. We're watching to see if this pair is going to go, how much lower it might go. Is it not going to hold that 68, 30, 40, 20, 30, 40 area? Is it? So, pretty nice little, it's been a pretty nice little downtrend, but that double bottom there, and with the dollar starting to reverse and starting to show us some potential signs of a sell-off, and then this coming up to that major support level, I really like this whole setup, this whole movement. And of course we have, in the Aussie dollar, we've got some, some upper targets we're looking for. And basically we're just looking to kind of trade it into the top of that range. Now this one also does not have, this started off the week here and hit that daily and weekly pivots. We don't really have any missed levels like at all on Aussie dollar. So there's no missed levels. There's nothing interesting down below other than just that big support zone. So that's what we want to see. We hit all these guys up here. We've got a monthly pivot and a bunch of good guys up there that we're aiming for. We took out all these levels here. Whoops. There we go. And there we go. So those guys are gone. But very much like this, and I think this is going to be a nice little trade. And as I've mentioned many times before, I like all the other Aussie pairs as well. But Aussie dollar is super interesting because it's a really, really good setup, and both, Australian pairs are hitting those major support levels, and the dollar seems to be nearing, trying to confirm a turning point. So the turning point is pretty crucial. So this Aussie dollar should give us another pretty great opportunity to get into this. Our last trade, our lowest entry on our last Aussie dollar trade was 68.90, I think is what it was. So back through here, pretty nice little entry. And I bet we can get pretty close to that 6,900 level again before jumping into this. Okay. Once again, it feels like I've been doing all the talking, which I guess that's how it goes on a webinar. But does anybody have any questions? You guys feel okay about that? Now that we kind of have a little bit of, foundation there, and again, that just goes back to all of these Aussie pairs. Aussie New Zealand, I'm interested. We've got Aussie New Zealand at 105. This is a pretty significant little support zone. We talked about this. If this breaks and makes a 104 run for us, I'll be even more interested in it, but I'm pretty interested in it at 105. I think 105 is kind of a good little spot to be doing some trading around. We've got, some pivots, some levels to look for. There's a nice little weekly pivot up here at 10. Let's move that real quick there. Whoops, there we go. Nice little weekly pivot over here at about 105.40-ish. Hey, Lars. Thanks, man. Good. Glad it makes sense. So, you know, I like this Aussie New Zealand, just like I like all the rest of the Aussie pairs. Again, moves lower would make me aggressively get into this, but right now I wouldn't be surprised to see the Aussie New Zealand kind of look at this kind of trading range double toppy stuff that we've got here. So double top, you know, a lot of reaction around 105, more reaction around 105 here. I would not be too surprised. The Aussie New Zealand, one of the reasons I like it is because it's not super volatile and it doesn't go totally crazy. And so I wouldn't be too surprised to see Aussie New Zealand do this kind of stuff, you know, just kind of bounce around that channel. And so 105 could be the area for that kind of a trade. Okay, so yes, let's talk about Aussie CAD. Aussie CAD's a good one. Aussie New Zealand, I think, is pretty stable where it is. Honestly, I'll be a little bit surprised if it breaks 105, but if it does, 104 is going to be, you know, find which kidney is your least favorite and, you know, get on the dark web and start selling that thing, because it's going to be a good time to really, you know, get in heavy down in that 104 area. So yeah, Aussie New Zealand's a pretty darn good one. It's, you know, it's easy to trade and it behaves itself, and these are all things that we really like in trading. You know, trading these high volatility pairs, it's exciting and it can produce tons of pips if we're right. And it's also kind of like trying to hit the jackpot, you know, with these high volatility pairs. It's a lot of risk, but, you know, there's a lot of potential reward, a lot of potential payout, but the risk is most of the time too high. And what are we trying to do here? Steady, consistent profits. That's what we really care about, steady, consistent profits. And so high volatility pairs, they give and they take a lot. Low volatility pairs like Aussie Swiss, Aussie New Zealand, Aussie CAD, you know, those kinds of things, they give a whole lot more than they take away. We can sit through, you know, low volatility trades going crazy on us, which is only slightly crazy, and we usually don't have any trouble. But those high volatility ones, you know, if you're trading Euro CAD, Pound New Zealand, you know, anything pound right now, Euro CAD, Euro Yen, Euro New Zealand, you know, that kind of stuff. If you're on the right side of it, it's incredibly exciting. If you're not, it's stressful and probably going to result in a loss. But with these pairs, we can almost be on the wrong side for a while and still come out okay. But fortunately, we have some, you know, some good setups we look for and all that. But I really like the low volatility, you know, keep us on the lower stress level. You know, that CAD Yen trade we had a week or two ago, CAD Yen's not a super high volatility one, but Yen pairs are a little more difficult to trade. And the CAD Yen kind of, it had me waking up in the middle of the night a couple of times checking my trades, which I do not like to do. I like to put my trades on and sleep well at night and do all that stuff. And so, you know, those high volatility ones can really kind of get us there. Okay, so speaking of CAD, or excuse me, of other Aussie pairs here, yes, we do have an old daily pivot back here that Chris is talking about, closing in on the daily pivot. It sure the heck is. I like the Aussie CAD mucho. One of the big reasons I like the Aussie CAD is because we go over here. That's a big, massive market imbalance. That's a great weekly pivot. That's a missed monthly pivot. It kind of doesn't look like it is, but I promise it is, because that daily pivot was hit, and the daily pivot ended right. Where's my vertical line? I don't really ever use vertical lines. The daily pivot on this one ended right there. And that's the start of the monthly pivot, right? Well, I don't know. Maybe, yeah. Yep, so right there is where we get to May 1st. Well, I guess it's a little bit further over, but anyway, you get the point, right? So that's kind of the start of our monthly pivot. Anyways, the monthly pivot's unhit. We've got, we've got market imbalances lurking through here. Lots of super exciting, super important levels. And again, a low volatility pair like the Aussie CAD is not just going to leave a slew of missed targets. Let's look at that on the 4-hour chart. It's not going to leave so many missed targets like that. Market imbalance, monthly pivot, weekly pivot, market imbalance, yada yada. So much good stuff there. I want to trade the heck out of this Aussie CAD, like to death. But we do want to, we had some missed targets back here. That weekly pivot has been clearly taken out. Once again, another good example, right? We've taken out that weekly pivot. The daily pivot is a handful of pips away, 10, 15 pips away from getting taken out. And so we're absolutely interested in buying this Aussie CAD. Now, here's the situation. We have got, a really nice little level, really nice little area over here that continues to get hit like crazy. It's less than 100 pips away, right around 100 pips away. We're sitting here at 92.40. We've got that big support zone again that goes all the way back here to 2010, July 5th. I think I was recovering from a riotous July 4th. This was before kids, so I must have definitely been hungover or something. I don't know. No, I don't know. But July 5th was kind of that last time of 2010 that we hit or that we were below 91.50. We took a little bit of a dip here, got down to about 91.25, but really for the most part 91.50, 91.50, 91.25.50, and we're coming right back down to it. So I want to trade this to death, but we're going to see if if Aussie CAD is going to try to give us just one little push here. Our next big levels are all the way down there. I don't know. I don't think we're going to make, that kind of a movement, but it is possible. And so we just kind of want to, keep our eyes on all that stuff. But I would say 91.50 is going to be a pretty good area for us to be watching closely and ready to trade. So, I think a little bit of additional confirmation wouldn't be the worst thing ever. This is what we want to see, right? We want to see big levels that we're coming up against. That's a huge level. It's a 10-year, 9-year level. We've got lots of great targets up above. So those are kind of the most important things that we want to have in place. And then we've got all these other Aussie pairs approaching these major support zones. And we're going into summertime, right? This isn't a time where typically, major levels break out, right? Major levels break out before summer and they break out after summer. They don't really break out, during summer. And oil, yeah, Lars, oil is a great one that we're going to watch, because we're seeing oil strengthening a little bit and CAD pairs are going nuts, right? Aussie CAD, New Zealand CAD, CAD yen, dollar CAD, everything CAD is showing a ton of strength. And I think we had pretty good employment numbers for the Canadian dollar, didn't we? I think last week, if we look at that real quick here, yeah, I mean, Canada killed it on employment numbers, right? Unemployment rate went from 5.7 to 5.4. That's a huge. We usually don't see more than 1 or 0.2% in movement, and this was 0.3%. That's pretty big for an entire country's unemployment rate. And then we, saw 27, almost 28,000 jobs, and all they were looking for was 5. So, ugh. Anyway, so we'll watch that, but as far as the big levels go, the Aussie CAD is it, man. That has got the big levels, and I want to trade around those big levels. Even if we do nothing other than some short-term trades, trade it right off 91.50, 60, 70 area, and grab 50 pips or whatever. I want to do that. Norbert, yes. The other one is a 50 exponential moving average. This little black line right here is a 50. Yep, so I have a 200 and I have a 50. And I have the 50 just to kind of give me a little tiny bit of extra reference. When I'm in trades and I'm looking for, continuation and so on, I kind of watch that 50 to see if we can, stay above and stay below. There's a few things I use the 50 for, but I don't actually use it as much as I use the 200. So, If I got rid of the 50, I'd be okay, but I kind of just use it for a little bit extra reference. Okay, so Aussie CAD, major level. We have our Aussie Swiss trade. Let's talk about this one. I forgot about the trade that we actually have open here. We have our Aussie Swiss. By the way, just while we're here, not to be too scattered, I don't know. I think we're going to cancel our New Zealand Swiss trade. We actually have some decent New Zealand weakness, and so New Zealand Swiss seems like a pretty decent idea. But you know, I think I'm going to let this one play out for a day or two and cancel it and see kind of. I think there's a few other trades I want to set up here, and so I think we're going to cancel this New Zealand Swiss. It hasn't filled. It is not filled yet, so it's no problemo. But I think we're going to cancel that pending order on New Zealand Swiss. But our Aussie Swiss did fill 69.25. It struggled getting filled there, and then it filled and filled and filled and filled a million times. Everybody had, you know, literally plenty of opportunities. You had at least a couple of good days to get into that Aussie Swiss. Okay, so we're in at 69.25. Long, we have bought. We're scaling into this puppy. And remember, this is what the chart looks like, right? We're kind of trading this, you know, we're trading this a little aggressively, right? We're saying, hey, this is going to be a head and shoulders pattern for us, an inverse head and shoulders pattern, and we're trading the heck out of that right shoulder. And it's interesting because we have kind of the same exact thing over here, right? It's kind of a funny thing we have on this Aussie Swiss. So a nice inverse head and shoulders pattern runs up and never really gives us a major neckline break, right? Of this big picture. It just kind of runs up and creates a channel high, and then it comes back down, and here we go with another kind of weekly inverse head and shoulders pattern. That's one of the reasons I look at this and I say, geez, 2 weekly head and shoulders patterns, probably something good's going to happen here. So that's why we're in this Aussie Swiss. The other thing is Aussie Swiss, you know, as we've mentioned on a couple other pairs, not super volatile. So if this thing goes really crazy and it says, guess what, we're headed back down to, you know, this low and kind of that, you know, candle close, we couldn't get a close below that. That just takes us down to 6,700. That's 200 pips, not the end of the world. We can easily sit through that and add another position down there. So that's part of it. The other reason that I like the Aussie Swiss a lot is we have some good targets, right? We have a nice daily pivot and a monthly pivot. And we've got some stuff back here that I'm liking, a big daily and weekly. We have, I think we have some market imbalances lurking through there just a little bit, but you know, some nice targets to go for. And the Aussie Swiss, again, is a real low volatility pair. And doesn't leave missed levels too terribly long. Big market imbalance right back here, 72.30. So lots of good stuff that you know, that tells me, yeah, I really want to be in this trade. I really want to trade the heck out of it. So that's kind of what we're looking for. There's a pretty solid little trend line here. So. Getting above that will be helpful. Otherwise, we're just going to scale into this thing at 67, you know, 6,700-ish, and go for it from there. But I am liking that. Okay, so we're leaving that. We're in it. It's against us 25 pips or so. Again, not too worried about that. We're open to a 200 pip drawdown where we could add, you know, in that dip. So Aussie pairs are susceptible to a lot. You know, they're in the crosshairs of China and so many other places. But these big levels just, I don't know, I trust them a lot. I trust the big levels a lot. And it's, you know, big levels do break out, but they don't break out this time of year so much. So that's why I'm, you know, definitely gung-ho on Aussie pairs. We want to do some stuff with some Swiss pairs. We're watching CAD for sure. As we talked about the oil situation, where is oil headed? Oil's had a big move, you know, and what's the Canadian dollar going to do with some of this. That'll be interesting to find out. We had a massive sell-off in oil, right? Remember that? October of last year, all the way to December. In 2 months, 2.5 months, oil lost like a massive amount. We went from $76 down to 42, but then it had almost as aggressive of a comeback here. It went from 42 in the end of December back up to 66 by April. So it ran up a little more quickly than it ran down, but it's kind of in this zone of where is oil headed, and it's a good point. Where is oil headed? And I wouldn't say that we have some major clarity on these charts, which is why I'm kind of I'm going to be a bit cautious on CAD pairs and so on. I don't know if we have quite as clear of a picture on CAD pairs as we do on some of these others, but oil will be something important to watch. There's a pretty bullish little candle there on the weekly chart, and weekly candles I look at pretty closely. So we'll see if oil continues bullish. Summertime is usually a pretty good time for oil to continue to rally. So that's going to be something to keep in mind. All right, guys. So we're looking at buying the dollar, or excuse me, selling the dollar. That's a pretty important distinction. We're looking at selling the dollar after a little bit of pullback. We really want to see the dollar get below the 200 moving average. We still very much are taking into account this bearish picture. And in fact, the higher the dollar goes, the more I want to sell it. And so that's going to affect trades on the Aussie dollar, on New Zealand dollar, on dollar CAD, on euro dollar, of course. We have some really, really good stuff we can do with the dollar index pulling back and giving us a chance to kind of reload and recharge. And we can even do some things, like on dollar index and on euro dollar. We can trade with some stop losses, which I do sometimes, not as much. But we can trade with some stop losses if this thing starts to make a push up around this big double top up here, which would be the exact same double bottom on euro dollar, which is 111. We can trade against those levels. If we get the euro dollar down around 111.50 or so, we can trade with a 50 pip stop loss and see if that movement's ready to go. But this week I feel specifically anxious to trade dollar pairs, and I feel anxious to trade Australian pairs. The yen is kind of moving around, the Swiss franc's moving around, the CAD's moving around, and those are all on my radar. But I really want to do some stuff with the dollar, the U.S. dollar, and the Australian dollar this week. So that's kind of where a lot of the focus is for the week. What do you guys think about that? Questions, comments, thoughts? Did I miss any currency pairs anybody wanted to talk about? We talked about the Aussie New Zealand that a few people mentioned, Aussie CAD. Other pairs, is anybody really gung ho on yen pairs right now? Or are you going with anything high volatility? By the way, I talk about high volatility pairs, and I say be careful, but it doesn't mean that I hate them and that we can't talk about them. So even though we don't trade the higher volatility pairs, we can definitely discuss the setup. So if anybody wants to look at those, don't hesitate to bring them up. Let's talk about them. Norbert on New Zealand CAD. Thanks for bringing that up. That kind of takes us back to the CAD pairs that we're looking at. New Zealand CAD, I want to buy. I want to buy New Zealand CAD after some dips. And it's dipping like crazy right now, actually. And so remember let's look at the 4-hour chart for a second here. We have kind of this whole area right here, right? We have this falling wedge, breaks out, starts to run up, and then it just, kind of pounds back down again. So I'm going to watch this New Zealand CAD around this double bottom at about 8,700, which isn't too far away. It's only 80-ish pips away. But there's some really, really good targets up above. Huge, crazy, ridiculous market imbalance. Boom. Big weekly pivot, monthly pivot, another big market imbalance. It's, I think, let's see, have we hit that weekly pivot yet? I don't think we have. Another weekly pivot right here. And the thing, guys, the thing to remember, and this is why I trade the way that I do, right? People say, oh, it's so boring sometimes sitting in these trades and just waiting for them to play out. Yes, but what's going to happen? What will happen is that all of these targets are going to get hit, right? And so we have to find the most likely area that this thing is going to stop running away from these magnets, these massive targets. And sometimes we have to sit in a trade for a while before it gets up into those areas. But this New Zealand CAD will hit this monthly pivot and this market imbalance and that monthly pivot and that weekly pivot and that market imbalance and so on. So why not sit in a trade? Why not be patient with it and let it play out and get it up into these huge areas? That's all these markets do, is they just go up and down. I remember one of my brothers, when I started trading, he told me that. He goes, you got to figure this thing out, man. Markets just go up and down. And I was like, well, no kidding. I get it. Markets go up and down, but it's a lot more complicated. And the funny thing is, after, coming up on 2 decades of trading, it has just come right back down to that. Markets go up and down. Right now, this market's going down a little bit, but it has a lot of reasons to go up. A lot of reasons to go up. And so all we're looking for is a reasonable spot to start trading in that direction, because these levels will get hit. So why not space our risk out a little bit, get in the trade, stay in the trade, get it back up to those areas. George, would you buy New Zealand CAD after it crossed the 200 EMA? On this 4-hour chart, I would be, I would be a little less, I don't know. I'd rather buy dips, I guess. I'd rather buy dips. 200 EMA is a big deal, on as far as trend and so on goes on that daily chart. I do like the 200 EMA on the daily chart. But that's about the only time I look at it as far as, are we really bullish or are we really bearish? 1 hour and 4-hour charts, I think, I'd rather find just kind of a good level to enter and then kind of trade it from there. So no, I guess to answer your question, no, I probably wouldn't use that as a trigger to take the trade, crossing that 200 moving average. There's enough targets up there that's good enough for me, and I'm just kind of trying to get it as low as possible before jumping in. Very good question, George. Very good question. And we talked about the 200 EMA on those daily charts on like the euro dollar and dollar index, and there's been a big reaction there, and there has been a decent reaction here. But yeah, I would still very happily buy this underneath the 200 moving average, which I don't really want to do as much on some of those daily 200 moving averages. Trade kind of on the wrong side, I guess you could say. So yeah, good question. Good question. James, bought the CAD at the base of your channel, small size, so we'll hold 88.30. Great. That's a great entry. Good. Norbert, if bankers control 95%, why allow retail in? I don't know. I guess maybe they legally have to. I don't know. But the bankers and the institutional funds and so on. Remember the foreign exchange market is, we're a small drop in the pond here, and so we're just kind of looking to play by the other guy's rules, learn the rules, and then the game's a lot easier. But it's a good question. Why let us in? Why let us in? The stock market's very similar too, right? I mean, institutions own tens of millions of shares of companies. And, the average trader with their, $100,000 401k has, 100 shares, kind of a thing. So yeah, I guess there's room for everybody. Okay, so other questions, other comments. That New Zealand CAD's a goodie. That's a goodie. I do like that. And I like New Zealand pairs. I mean, we've got our New Zealand Swiss, that pending order at 65.25. Yeah, I mean, that double bottom, that whole area is pretty interesting right there. But one thing that kind of turned me off, I'll tell you really quick why I'm saying, because I was looking at this on a bunch of different charts, why I'm saying maybe let's cancel, not maybe, we will cancel our New Zealand Swiss for now, is I'm looking at this and I'm saying, that is an aggressive bearish engulfing candle. That's pretty darn aggressive. We've had these kinds of up and down candles like crazy here, and that one is pretty. You know, that's a hungry bearish engulfing candle. So as I look at that, I think to myself, well, this could be headed a little tiny bit lower. I want to buy New Zealand Swiss as low as possible. And I thought that, you know, that 65 area was a good spot, and I still think it is, but if, you know, if things are going to get too aggressive, then we might be headed down into kind of some of these next support zones that are a little bit more into the mid to lower 60s. So I'm just gonna kind of watch that. I'm not saying that it will get down there, but let's watch this pretty closely and see kind of what happens. So yes, so let's do that, and I'll do this right in front of everybody just so I don't forget about it. We're going to edit trade. This is a cancel never filled. So we're canceling that puppy for now, but we will watch it. We'll look at getting back into it, or getting into it coming up here for sure. Okay, guys. What else? What else? What else? What else? Any other thoughts? Any other currency pairs you want to look at? Anything else you want to look at? Like I said, I'm pretty heavily interested in dollar and Aussie, US dollar and Australian dollar pairs this week, and we'll do some there. Lester, this is why I ask you guys these questions. Lester, thanks for bringing up the Euro Swiss. I get talking so much, I forget some of the things I wanted to talk about. I did want to talk about Euro Swiss, so thanks for bringing that up. That's a great one. Euro Swiss is quite interesting. You know, as I said, I'm pretty interested in most Swiss pairs right now. And Euro Swiss is coming down to this. This is a big market imbalance right here, and that's at 111, right? Here we are at about 112, and at about 111, we have a big market imbalance, and we think, well, do we care that much about a big market imbalance? Yes. You know, there's a big, you know, long wick there. This is telling us this thing's trying to kind of reverse a little bit on us. But more than just that market imbalance, look what is over here as well. Geez, I'm glad you brought this up, Lester. So we have got some pretty good little stuff to be watching for over here, right? In kind of that 111, you know, just above 111 area, right around there. So, I mean, this takes us back again, you know, 4 or 5 years now of pretty significant levels. So I like that. I like that a lot. We're in Aussie Swiss. Euro Swiss looks awesome, especially I think, you know, the Euro might be ready for something a little tiny bit interesting here. And so big important level down there. Euro Swiss looks, you know, really good. So let's get this thing down. You know, here we are at 111, you know, 95. Let's get down into the 111-ish. Let's get down 50, 60, 70 pips, and we'll start buying that. Oh, excuse me, buying the heck out of this thing. Buying it like crazy. So, yep, I love the Euro Swiss. We've made money on Euro Swiss. We've had plenty of trades on this thing, I think, in the past, haven't we? We've had some Euro Swiss trades. At least I think. Maybe I'm making this up. Maybe it was in the other trade group. I mean, have we not traded the Euro Swiss in here ever? I know we have. But there we go. There's a Euro Swiss. Closed at break even? Boy, that's not encouraging. There we go. Euro Swiss closed at 50 to 70 pips. Closed, no, 5 pips. Good grief, 2 pips. That's not impressive. Maybe it was in the other group that we took a big Euro Swiss trade. Anyway, I like the Euro Swiss a lot. Again, it's a low volatility pair, and it behaves itself pretty well. James, Pound Swiss seems to have lots of, yes, targets above. It's taken out, missed pivots below. We're trying to get long. It's a bit lower. The Pound Swiss, I have been watching the Pound Swiss just because it's getting so off the charts, right? Pound Swiss has gone like straight down. So, I mean, that's been at least interesting in and of itself. I think we even had a 1 hour kind of trade on this before it kind of tapped that right there. But yeah, pound Swiss has got pivots galore. I mean, let's see, I guess we hit that one, barely hit that pivot, but you know, there's 4 consecutive pivots. There's weekly pivots everywhere. There's monthly pivots. Pound Swiss at some point is going to have to do something. I would say, you know, I'm kind of watching this whole area here, and I think pound Swiss gets a little more interesting above 126.50 probably. So anybody, you know, people have kind of asked about the pound Swiss in the scanner group because we had a good scanner trade coming up here, and that's why I've kind of been watching this thing. But I think a move above 126.50 really kind of solidifies that this might be ready to start to go a little bit. So buying dips on here, this thing can just dip forever, and it might. So buying dips can be a little bit tricky. We've got some good support, you know, coming up here, but that's another 100, probably at least another 100 pips lower. And then there's, you know, kind of a big channel and so on. But yeah, pound Swiss is interesting just because it's so ridiculously overextended. So we'll see, you know, we'll kind of see how that plays out. But above 126.50, I think it gets a lot more easily bullish. Either that or it needs to drop another 150 pips probably. Or at least 100 pips. Good, good. What else, guys? What else? What else? Anything else? If that's all, I'm going to wet my whistle. And I feel like I've been talking a lot. My throat's going to fall out. But everybody good with that? Good with those details? All right. All right. Jack, my friend, good to see you. Good to see you, Jack. Kevin, Mr. Bell, good to see you, my man. Jeez Louise, we got some good visitors. Hi, Roy. How you doing? Good to see you. And Sim, there you are. I noticed you weren't in here right at the very beginning, Sim, and I thought, I hope he's okay. I hope he's okay. But good to see you, Sim. Time for coffee, indeed. I'm on a 3-day coffee break, and I can't say that it's all that it's cracked up to be. I'm not loving it so much, to be honest. That's probably why I sound like I'm gonna die this morning. But letting the old body, you know, rid itself a little bit. Yes, I'm sure it will. I'm sure it will. Yeah. It's you can, you know, you just kind of mix it up a little bit, right? Kind of mix it up. Yeah, good to see you, Roy. Good to see you, my friend. Yeah, good for the health. So yes, green tea is good. In fact, I think that might have to happen. A little green tea is always good. All right, you guys. Good to see. Give in to the bean. Trust me, I usually do. It's, you know, it's funny. I've never been a big caffeine kind of guy until I was about 10 years old. No, just kidding. Until a couple years ago. And man, you have kids and work and life, and I think there's a reality that a human being has to come to, and that is consume caffeine or die. And I came to that realization. I thought, okay, well, I don't want to die, so I'll stay with it. But yeah, trying to Jameson and honey and coffee, also a good option. Also a good option. Yep. Clears the sinuses. Yeah, boy, no kidding. Well, good stuff, you guys. Have a wonderful rest of your day. I'm going to update the watch list and get that posted for everyone. And go Raptors. Go Raptors. Get it done. Come on, baby. All right, guys. Have a great Monday. Thanks. Good to see you all. Everything will be posted and is coming shortly. Great questions, great comments, great everything. Good to see you guys. Have a great Monday, and I'll get this recording up, and I'll get the watch list updated. Take care, everybody. We'll see you.